Hey guys, Rob Mitchell here. Thanks for joining me for this day trading, amazing and smart T2 divergence day trading pattern secrets. I'm going to show you some ways to pattern classify stuff so that it can make your trading and your research and your results more repeatable and scientific. Yeah. So let's take a look at what we got with that. First off, past performance is not necessarily indicative of future results. There's a risk of loss trading futures. I don't think I'm going to state any specific performance things in here. We're going to look at some patterns and different ways that you can think about charts. It's going to be real cool. So the methods I show in these videos are intended to show you various ways you can establish components or concepts that can lead to a successful day trading system or strategy, or even swing trading systems for that matter. And for these examples, I'm going to use tools that I have been using for many, many years that I developed for my own trading and that I happen to share with people through some of our resources. So what's a pattern classification in trading? What is a pattern classification? Pattern classifications, or PC, are game changer for those who are seeking to approach trading scientifically or in a way that makes trading results repeatable when applied correctly. PCs are usually used with a structured price bar like the Smart Super Renko from IndicatorSmart, or could be also applied to other bar types given a defining qualifier. But for the example of today, we're going to use Smart Super Renko. The simplest form of a PC is when you define reversal bars or continuation bars as the qualifier in price. For example, if you have a reversal bar. We're going to look at a chart in a second. I have these reversals set up to be double the size of the continuation bar. So if you get a reversal and then you go one bar further, a continuation bar, before reversing again, we call that an R1 pattern. R1 pattern. Reversal plus one continuation. If you go two continuation, it'd be R2. Before you get another reversal going the other way, three continuation would be R3, etc. Like I said, we'll look at a chart in a minute. Each of these for up and down direction. For the up and down direction. So these are basic pattern classes that are well worth paying attention to. If you classify this way, then if you have a trading pattern and it's limited to that pattern, then that's what is irreducible. There is no smaller shape for that. And so irreducibility makes the best science because there's no lesser pattern. There's no lesser pattern. As a result, if you have a pattern and that you have classified in this way, you know that you have that pattern and not something else. So these are just the ones on the price. And then I'm going to show you some ones that happen in some other different kinds of ways as well. I cannot stress the importance of this concept of pattern classification. Super, super important. And we teach this in the trading room. We use this concept every single day. It's at the core. Like I said, it's irreducible and makes things repeatable and understandable at a glance, which is even cooler. So for nearly 10 years in the trading room, I have taught the T2 divergence pattern. We started the room with that. We still use it today, every day. It's still probably the #1 go-to trade setup. Why? Because it's based on the way the market works. I got to get into a lot of theory about it, but we've done a lot of webinars on this in the past. So if you further pattern classify T2 divergences, then you'll have extremely specific T2s. Further, once you work with those pattern classes, then, and pretty much only then, will you begin to see more patterns. And this is why I teach, learn one thing first. Yeah, don't learn 5 things. Because if you learn one thing first, then that opens the door for you being able to see other patterns. So, and that results in what? More tree to hang your fruit on. Yeah, you're trading fruit. Yeah, super cool. If you do it that way, it will pay dividends. Yeah, forever and ever. Yeah. So when you have an extremely specific T2 or any other pattern for that matter, then you know what you have when you have it. And trading is a lot more fun when you know. So over the years, I've done a lot of webinars on the T2 pattern. So I'll briefly redescribe it here. I got some marked on the chart, refresh your memory. If you want to learn more about T2s, if it's not immediately familiar to you, you could peruse the earlier videos on this channel. Yeah, a T2 occurs when the momentum, we use a smart momentum from IndicatorSmart, goes counter to the direction of a move on a point-to-point basis. Yeah. So if you go R3 in a direction of reversal plus 3 continuation bars, up or down, and then R1 going back in the opposing direction in the counter move, and then reverse to continue the existing trend while the momentum goes in the opposite direction, you know, over the exact same interval, then you have a T2. Yeah, T2. What's that look like? So the market comes down, we go R1, 2, 3, 4, 5, 6, 7. Yeah, R7 pattern. Yeah. And then you get a R1 pattern in the counter, and while you get the R1 counter inside the R7, the momentum is going in the wrong direction to the trend. Yeah, from the reversal to the reversal. Yeah, from the reversal to the reversal. Yeah. We were talking about these different bar pattern classifications. So R7 right there, R1 right there, R1, 2, 3, 4 right there, and another R4 following it. Yeah. I go R1, 2, 3, 4, 5 in the counter move against an R4 going down. That means that we took out this edge. Now I have an indicator on here called the Smart 1, 2, 3, because we're going to discuss in a minute how that works. Yeah, that's these lines here. I'll come up and touch that line. Yeah. Yeah. I'll go R5 in the counter, R1, R1, and then you go from R1, yeah, going down to R6. Yeah, R6. 1, 2, 3, 4, 5, 6. So the first leg, a reversal plus a continuation, is small, and the one on the right is big, and we call that CD is greater than AB. I'm going to cover that in a minute. Yeah, I'm going to cover that in a minute, but we're here looking at it. So we go R6 on the first one, and then you get a R0, no continuation bars, and then you go R4. That CD is less than AB. Yeah, so this leg is longer, this leg is shorter. And we get that longer leg, shorter leg, T2. Yeah, T2. From the red reversal to the red reversal, the momentum, the smart momentum is climbing higher. Yeah. Here's a CD is greater than AB. One is R8 right here. Usually when you get something like that, that's the biggest thing on this chart. You're going to be looking for some consolidation. Yeah, now that's the general pattern there. So, and I have some other classifications. We will revisit this chart in a minute after I go over these patterns verbally. Yeah. So there's several pattern classes that we've identified in our trading room over the last 10 years or so that may result in decreased performance of the T2s in various circumstances. And it's good to know these pattern classification secrets. Yeah. So, which is what this little mini webinar is about. So first one is CD is greater than AB. We're just looking at that. Yeah. So if you have an extension that's greater than the prior extension, that's all that is. CD is greater than AB. When this occurs, you may often get various forms of consolidation. Yeah. you're overbought or oversold is another way of looking at it. Yeah. But it's better to think of it in terms of the exact shape because the shape is irreducible. Overbought and oversold get to be very fuzzy terms in trading. Oh, it's overbought or it's oversold. Well, fact of the matter is the market could go infinitely higher. And if you've been around the block a couple times, it can also go negative. Yeah, we've had that happen. Yeah. So next pattern, encompassing pattern. Encompassing patterns when an extension in price takes out prior ones in one run. We're going to look at that on the next chart. Yeah, this makes the market non-cycling. And when you have a non-cycling market, that will often attract confused traders because they don't know, they don't understand the pattern classification, and so that results in what? Random movement. Yeah, random movement. You don't want to trade in a market that's random or that is inviting counter players to your trade. You prefer that you got the majority on your side when you take the trade. So you trade into random moves, either going to sit in the trade for a long time, take a lot of heat, all that kind of stuff. So it's good to, if you know the encompassing patterns. Yeah. Another one, scale changes. Yeah. For this one, there's a change in the scale. Typically, this will look like the extension is bigger than anything else on the chart. We just had one on the chart we looked at, R8. Nothing else was that big. Yeah, that is an example of a scale change. And when you get that, it's bigger than anything else on the chart. This also has a randomizing kind of an effect. You know, because people think, well, it's oversold, and so they're going to take profit. You don't want to go trading short down at the bottom of an R8. Yeah. Or if you are going to do that, you might want to trade a little smaller, things like this, money management. Yeah. All kinds of things you can do with the concepts that we're covering here. Yeah. So you want to trade from normal to abnormal and not the other way around. So ideally you get in before these patterns occur, CD is greater than AB, scale change, encompassing patterns. You get in before the pattern occurs, and then you exercise caution following, not the other way around. Yeah. This can be a huge game changer for those who know. It really can. Because most of the time, markets don't just run away. Maybe 5% of the time they run away. Yeah. Well, you don't want to trade where it's only 5% in your favor. You want to trade where it's 95% in your favor. Yeah. So these patterns help you to align yourself with that. Yeah, these kinds of patterns. Another PC pattern classification is reference structure. Now I put that SMART 1, 2, 3 on there. Yeah, and we'll cover a couple of those in the next chart. Reference structure is identifying the original departure point from which a move of a given magnitude makes to a new high or low. Yeah. And this departure point is an important reference as it defines the structure. Yeah, defines the structure of the market. Tools that do this are the SMART 1, 2, 3 shown on the chart, or the SMART Trend Tools Algo Structured Lines from IndicatorSmart. Both SMART 1, 2, 3 and SMART Trend Tools Algo from IndicatorSmart. Yeah. Another cool pattern classification is a T2 on the SMART Momentum itself, the T2 that are not out of bounds. I had some of those drawn on that chart earlier. We'll recover them. Yeah. So what this does is it puts a squeeze on the T2. It forces it to be of a minimum magnitude, the T2 itself, but not too much. Yeah, not too much. Under certain circumstances, an OOB or out of bounds T2 spells trouble for those who don't know. Again, because it invites a potentially randomizing effect if traders get caught in the associated expanding scale. Yeah. Out of bounds T2s are associated with expanding scale. Yeah. You want to know when the scale is expanding, and the momentum is actually designed to identify just these things: expanding scale, but also expanding wavelength or cycle length. Yeah. So put another way, it helps to ensure that you're trading from normal to abnormal and not the other way around. Yeah. So let's go over a few things on this chart. There's a ton of information on this chart. This is a short full video, a ton of information. But if you've been using these tools for a while, this would be a little bit more familiar. If you're not, I would, if this makes sense to you, I would give you some resource for learning a little bit more. Yeah. So the Smart 1, 2, 3 is on this chart. These lines and dots. Yeah. Lines and dots. And so there's also numbers on these. You could also use those, but I'm not using the numbers as part of this presentation. So when you make an extension going down here, the reference structure becomes that number 1 right there. Reference structure becomes the number 1. And then it goes 2, and then it goes 3, and then it goes 4. See how that resets to 1? It's because it took out the line. Yeah, took out the line. Now, I'll generally will not consider, I could have set this a little bit differently. I generally will not consider that for the way I have this set, that the reference structure is not broken until I have one continuation bar through the line. The trend is still intact, in other words. Unless I get one. There's really only one of those on this chart. This trend is officially over in here. When it breaks by one full complete continuation bar. Yeah. All the rest of the ones on this chart have not done that. You know, break number 6 over here. They go 2, 3, 4. You did not break by more than one complete, and so you can consider this could be a continuation pattern. Yeah, and then 2, 3, 4, 5. And then encompassing pattern over here. So the way the encompassing pattern works is I drew boxes on these. So I've got a structure here, an R0 structure right there. Yeah, back-to-back reversal bars. And then I took out the high of it, and then I took out the low of it in one run. We call that an encompassing pattern. When you get encompassing patterns, you're technically non-cycling until you go down here. You know, the encompassing pattern to here. Yeah, right there. There's a little bit of a tail on that bar, and so I didn't classify that as a breaking of the pattern like it happened over here. Yeah, it's more than that over here. So this one's a little bit different. Yeah. So what else did I add to this? So you have a scale change. So everything over here is a little bit smaller, and then I get this, I think it was a R8 here. 1, 2, 3, 4, 5, 6, 7, 8. R8. You know, it's bigger than anything to the left of it. And so it falls into the category that we covered earlier called a scale change. It also happens to be an encompassing pattern, and sometimes those happen together. Yeah. And then we get an R7, and the R7 is smaller than the R8. Yeah, when this happened, this is the open of the day here, actually. You know, this right here. When this happened like that, it was a signal that this market was not normal. You know, not a normal day today. You know, I was just using the chart for today. So if this R7 is less than the R8, then that is a CD is less than AB, and then you pick up the T2 on that. You know, it's not out of bounds. This one over here, as it came up over here, and came up and tested the reference structure right there, went way out of bounds, and then you double topped, and you got a traditional T1 type of a divergence right there. That's another thing that's beyond the discussion here. That happened the second time over in here, the exact same pattern. Both of those are very tradable, but during the area where you are out of bounds, I recommend that you don't trade those, or that you at least learn to understand those within the framework of that pattern classification. Big game changer. Big game changer. Yeah. I really like the ones that are inside the out of bounds lines. The smart momentum. You know, on the smart momentum. I'll come down here. We went R1, 2, 3, 4, 5, 6 to R4. CD is less than AB. T2. I got a CD is greater than AB T2 right here. This leg is R8, R1, 2, 3, 4 to R8. And this T2 is a little bit more dangerous. It did follow through. I expect consolidation. Once I get that, as mentioned, these tend to have a randomizing effect. When I get a scale change in a run, and tend to have a randomizing effect. So when you get that T2 right there, you're like, well, I'm CD is greater than AB, scale change, etc. Be careful, trade smaller or whatever, etc. Encompassing pattern right here. I just drew it. Right here, encompassing pattern. Then you encompass the encompassing pattern on this one. So the structure gets very complicated in here after this. You do an encompassing pattern and then you encompass the encompassing pattern. If I draw that right there and I go both sides in one run, that's the definition. It's a little hard to see those at first. It's a little hard to see those at first. So these are all the patterns, encompassing pattern, CD is greater than AB, scale change, out of bounds, and reference structure. All those things. So you could stop the video and study this chart. And I think that you'll find these patterns to be very useful. Proper application of these factors can significantly improve trading results. These and other patterns are taught daily in the trading rooms and a live trading environment. If you'd like to step up your game by learning a more scientific and potentially repeatable trading science, that didn't happen by accident, consider joining their rooms. Consider joining the trading rooms. So at the trading rooms, if you key in I got a discount code here for you, a coupon code, special member, key that in at checkout for a nice smart discount. If this what I'm showing you here makes sense to you. These are a tiny fraction of the kinds of things that we teach in our trading rooms. So if you want to step up your game a bit, consider that. StockIndexTradingRoom.com, moderated by Steve Myers, and OilTradingRoom.com, moderated by me. Both these rooms teach patterns that could be used in any reasonably volatile market. I would take patterns that Steve's teaching over in the Stock Index Trading Room, and I could apply them to gold, I could apply them to crude oil, and apply them to anything. Might have a little bit of adjustment to patterns, pattern classes, and things like that. So we use slightly different, the chart scale slightly different for the ES than the crude, for example, or might use different ones for NASDAQ or gold or whatever. I use the same for crude oil, gold, Russell, use the same 510 that I used in this this little mini presentation. So thanks for joining me. What's the coupon code? Special member. Key that in at checkout. Thanks for giving me an opportunity to share with you something that I do every day that I'm super passionate about. Thank you, and we'll see you on the next one.